Do you dream of having your very own property empire? Are you looking for a way to diversify your investment portfolio and generate a passive income? Or are you just interested in investing in real estate, but don't have the time or the resources to manage a property on your own? If so, an equity real estate investment trust, or REIT, might be the perfect solution for you. In this complete video guide to equity real estate investment trusts, I'll give you everything you need to know about REITs to help you to become a better investor. So let's get straight into it. Firstly, what exactly is a REIT? A REIT is a type of investment that allows individuals to invest in real estate without actually owning property. This might sound implausible, but let me explain. A REIT is a company that owns and manages income-generating real estate properties, such as apartment blocks, office buildings, shopping centres, hotels, and warehouses. REITs generate revenue by collecting rent from their tenants or by selling properties at a profit. So, in a nutshell, investors will buy shares in the REIT. The REIT uses that money to buy real estate that they then rent out or sell at a profit, and then the REIT rewards the investor by paying them back a dividend. Something that I found really interesting about REITs, and that most people don't know, is that REITs typically don't pay any corporate income taxes for earnings that have been passed along as dividend payments, which I'll discuss in a second. However, in order to qualify as a REIT, a company must meet certain requirements. One of these requirements is that the company must invest at least 75% of its assets in real estate. Additionally, REITs must generate at least 75% of their income from rents or the sale of real estate properties. And here's a great one for dividend investors. There's also something called the 90% rule. This means that REITs have to pay out at least 90% of their income to shareholders in the form of dividends. In other words, a REIT cannot retain its earnings and has to pay them back out. As a result, REITs often have a solid dividend yield of around 3% and higher, depending on the specific REIT. So what are the ways that REITs can benefit us as investors? Firstly, REITs provide a way to invest in real estate without having to deal with the headaches of purchasing and managing property yourself. If you were to buy a property, you'd typically need anything from a 20% to 30% deposit as a minimum, and depending on the value of that property, that means you'd probably need around 20 to 60k just to get started. However, with a REIT, you can invest in a professionally managed business that owns a diversified portfolio of properties for a fraction of that cost. Also, purchasing a property can be a long and costly process that involves extensive paperwork, surveys, and negotiations with real estate agents and sellers. Whereas buying and selling a REIT can be done in the click of a button from your phone. Additionally, owning a property requires ongoing maintenance and management responsibilities, such as property taxes, repairs, and tenant management. So you also won't have any of those issues with a REIT. And as we've discussed earlier, another benefit of REITs is being able to earn a steady stream of income from dividends, which can be especially appealing for investors looking for a reliable cash flow. Remember the 90% rule. REITs have to pay out 90% of their income as dividends. Imagine receiving regular, predictable rental income without the hassle of being a landlord. Lastly, REITs have a history of providing strong returns, outperforming the S&P 500 over the long term. In fact, according to data from the National Association of Real Estate Investment Trusts, from 1972 to 2021, US equity REITs generated an average annual return of 11.9%, compared to a 10.7% average annual return for the S&P 500 over the same period. As with any investment, there are some risks for us to consider. One risk is that REITs are sensitive to changes in interest rates, and many REITs rely on debt to finance their property acquisitions and developments. When a company borrows money, they have to pay it back with interest. So as interest rates rise, the cost of paying this debt also increases, which can reduce the REIT's profitability and limit their capacity to make new investments. Economic downturns and recessions can also negatively impact REITs and their ability to generate income. For example, businesses may be forced to downsize or to shut down altogether, which can lead to lower occupancy rates in office buildings and other commercial properties. So how can you invest in REITs today? Investing in a REIT is easy. You can purchase shares of a publicly traded REIT through a brokerage account such as Trading 212. And if you are interested in starting a portfolio with Trading 212, I do have a link in the description where you can use my code and we'll both get a free share worth up to £100. And here are 4 examples of REITs available on the platform. The first one is Realty Income. Realty Income is a retail-focused REIT that owns and operates a portfolio of retail properties, including grocery stores, shopping centres and drugstores, leased to a variety of tenants across the United States. The second one is Vici Properties. Vici Properties owns and operates a portfolio of gaming, hospitality and entertainment properties, including casinos, hotels and golf courses, mainly across the US. The next one is Prologis. Prologis is an industrial REIT that focuses on owning and operating logistics facilities, including warehouses and distribution centres around the world. And the last one is American Tower. American Tower is a communication infrastructure REIT that owns a portfolio of wireless and broadcast communication towers, as well as other communication infrastructure, primarily in the US, but also in markets around the world. In summary, REITs can provide a convenient and accessible way for investors to invest in real estate. But as ever, always do your own research before making any investment choices. I'm interested to know if you've invested in any REITs before. And if you have, what REITs do you invest in and why? Let me know in the comments section below. I'll be reading and responding to every message that I can. I hope that you found this video interesting and informative, and I hope that it's given you inspiration and ideas for your own personal finances. If you have enjoyed the video, please drop me a like and subscribe to the channel to make sure that you don't miss out on any future videos. Thanks again for watching, and I'll see you in the next video.